Okay, that's the one. All right, so I've just run through the quick welcome, so you know myself and Petra. As I said, just hold all questions till the end. Hopefully, what we've been doing is collating all the questions. We had a lot of questions put through during the last few days. We will address pretty much all of those along the way, and then hopefully we'll have some time for any more questions at the end. So you know, there's been a lot of announcements over the last few weeks in relation to the government basically trying to keep the economy alive while we're having this what everyone's calling a crisis. As you can see on screen there's a lot of things that the government, just the federal government, have announced. Now today we will only be looking at the JobKeeper payment and none of the other packages. So we will press on. Now, everything's changing so quickly. There's updates every day about this. There's different interpretations of the law. So all we can say is keep yourself up to date with what is happening and how it affects you and your business as well. We've got hundreds of clients that have different scenarios that are going to be affected in different ways. And I'd love to get on the phone and to each and every client, but it's not always possible. So it really is up to each of you to keep on top of any changes as and when they do occur. But obviously we'll try and keep people up to date as best we can. So a quick recap on the basics and what we actually already know. So as far as employers go, and I know we've got a mix of employers and employees online, just so you know, the webinar today is going to be predominantly for employers, but it will touch on the employee side of things as well. So from an employer basis, the first thing you have to determine for the JobKeeper package is whether you're actually eligible to be in the package. So a couple of requirements. Firstly, you had to be in business on the 1st of March. That's pretty simple. You had to have a reduction of 30% turnover, and that reduction is to a comparable period of the same time last year. And we'll talk about that in a bit more detail as well. On the employee side of things, so once you've determined that you're an eligible employer, you then have to determine which of your employees are then eligible. And there's a fairly simple criteria, which is on your screen there. First one there, which is most important, is on the 1st of March. So you had to have had people or employees under these following categories on the 1st of March. So we'll quickly run over those. You've probably seen a lot of them already. Full-time, part-time or casuals more than 12 months. They must be aged 16 or over. Australian citizens, visa holders, resident for tax purposes. So there's been a lot of talk about people that are coming over to study and all those things. They're not eligible. It does include employees that you've either stood down or even if you fired them and you want to re-employ them again. They're all included. And you must make sure that they are not receiving the payment from another employer as well. And we'll take you a little bit later through how you do that as well. So just a couple of quick questions that were put through over the last couple of days that are relevant to those couple of points. So we had one question from a client. It says, we have at least 2 people leaving or retiring during the JobKeeper months. If we do a new hire, so if you basically hire people in replace of those, can they get the JobKeeper or can you get the JobKeeper on their behalf? Simple answer is no. Because you saw from the previous definition, it says on the 1st of March. So whoever you're applying or wanting to get the JobKeeper package for, they must have been employed by you on the 1st of March. And the second question that we had, which is relevant here, is someone who said they had a casual junior on payroll for over 2 years, which they stood down in late March. Does she qualify? This particular person was age 17 and living at home. So again, we simply go through those list of steps to see whether that particular employee is eligible. And in this case, this person will most likely be eligible because you've given the details that they're casual for more than 2 years. So they satisfy the first requirement. They're aged over 16, so that's satisfied. and they've been stood down and are now being rehired. What we don't know in this particular case is whether they're an Australian resident or a citizen, and whether they're getting a JobKeeper payment from someone else. So as you can see, it's just a matter of working your way down through the list to see if each employee is eligible. And later on down the track, what you will have to do is advise the tax office which one of your employees are eligible as well. So all that seemed fairly simple, but as we say, the devil is in the detail. There's been a lot of talk about the actual legislation. I think the legislation runs for something like 16 or 17 pages in total, which is pretty easy read. But once you look at the fact sheets, the information memorandum or the explanatory memorandum, all the articles since then, there's probably about 200 odd pages of detail that you need to go through to basically work out what the legislation means and apply it to everyone's situation. So the first thing is, in order to be eligible, so this is for the employer. So for the employer, you must have carried on business on the 1st of March and satisfy the decline in turnover test. Okay, so seems fairly simple, but we'll go through those two things in a bit more detail. So keep in mind, if you're an employer, these are the two tests you need to satisfy before you can even say that you are eligible, and before you can even tell the tax office that you want it to be included in this JobKeeper package. So we'll look at those then in a bit more detail. So first question is if you started business on the 2nd of March, is there any ability to be part of this package? It's quite simply no. The tax office put that 1st of March down as a steadfast line in the sand because they didn't want people setting up new entities after the 1st of March for people to be able to claim this package. So unfortunately for those who legitimately started business after 1st of March, right now there is no provision for you to be included in this JobKeeper package. Now, decline in turnover test. Now, this is where things start to get a little bit tricky. Now, again, keeping in mind, before you can even be part of this, that you need to satisfy this turnover test. So there's a few questions on screen there, which we're going to go through in a bit more detail. The first question that clients often ask us is, when you're looking at the turnover test, so basically saying, has my turnover reduced by 30%? Are we looking at past or projected, or past or present turnover? Pretty simple one. They're looking at projected turnover. So what that means for you as an employer is, at any point in time, you need to project what your income is going to be over the coming month or coming quarter. Okay, which then is the next question. So is it monthly or quarterly basis? You actually have the choice. You can calculate your projected turnover for the current month, for example. So right now, we're in the month of April. You can look at what you expect your profits to be in April, compare it to April last year, and then determine whether you've dropped that 30%. Or you can look at the June quarter that we're currently in. Obviously, it's going to be a bit harder to project your quarter than it is your month, and then compare it to the last quarter as well. Note at the bottom of the screen there a couple of points. You can include March, 31st of March, and secondly, it doesn't have to align with your GST reporting period. So if you're reporting GST on a quarterly basis, there is no need for you to then project your turnover on a quarterly basis. You can still do it on a monthly basis. You've got that option. So what period should you compare to? So in the legislation, so we said, well, you compare your month or your quarter, and you compare that to the same period on 2019. So for a lot of clients, that's pretty simple, but you'll see where there's a lot of cases there where that's not appropriate. So, or it might be that your income was unusually low last year. So although you've suffered a big decline in turnover of 30%, your income the same time last year was really low as well. So we're going to go through some examples of what we mean there. Before we do, there's a wonderful little section in the legislation which I've highlighted there in yellow. It says the Commissioner may, by legislative instrument, determine that an alternative decline in turnover test applies to a class of entities if the Commissioner is satisfied there is not an appropriate relevant comparison period. So what it's saying there is, although the legislation says you need to compare it to the same period in 2019, the Commissioner does have the discretion to change that. Now, whether he's going to exercise that discretion or not, so far is yet to be seen, but he does have that discretion to do so. So we're going to have a look at some of the reasons why your turnover may have been low last year, which would mean that you don't satisfy that 30% turnover. So you could be a sole trader, for example, and this time last year you had a baby. So you put everything else on hold and you had pretty much next to no income last year. If you then look at this period now, you might not be able to satisfy that 30% reduction in turnover. Likewise, we've got a lot of clients that have been, their business has been doing really well and has gone through massive growth. Even though they may have suffered a 30% turnover between now and say last month or last quarter, it may not be 30% down on this time last year. So again, they actually don't satisfy the rules at this particular point. Likewise, we had a client who said that this time last year was election time. And what we generally find with a lot of clients leading up to the election and even shortly after is business slows right down. So we have one client that said last year in April, their business came to a grinding halt because the election was coming. So even though they've suffered a lot now, they were suffering a lot this time last year as well. So again, they can't satisfy the 30% turnover. And the last example there is we've obviously been going through a drought, so the farmers may suffer with this as well, satisfying. So all of these reasons that I've put on screen are reasons why you may not be able to satisfy that 30% drop in turnover this year. So coming back to this definition that we said before is that the Commissioner may actually allow you to use a different period instead of 2019. But at this stage, there is no mechanism for him to do that. But it does leave the door open for him to do that if he so desires. But for all those people that sort of could associate with either having a baby or going through massive growth or going through a drought, right now there is no way for you to satisfy this 30% turnover. All right, the next one on screen is probably the biggest unknown at this point in time. So obviously a lot of people, when they use their BAS, you've got cash versus accrual. So which one do you actually use when you're looking at your turnover? So when you're working this out, we said that you need to look at your projected turnover, and the legislation says projected GST turnover. However, if you go to the legislation, the GST Act, the Act actually says that your projected GST turnover is the value of all the supplies that you made. Doesn't refer to cash, doesn't refer to accruals, it refers to the value of the supplies you made. From, in our opinion, right now, until we get notification from the tax office otherwise, we interpret that to mean that it's on an accruals basis. Now, again, there's been a lot of discussions about this one, and we are actually expecting the tax office to release clarification on this. Well, look, we've heard in the coming days, but we just don't know at this stage. But right now, for our clients, we're doing both. We're hedging our bets a little bit. We're doing cash and accruals, but by my definition, it should be on accruals, but we'll wait in the coming days to get that confirmation. So another question we get often asked is, what if we satisfy the turnover in 1 month? So let's say you look at your turnover right now and say, well, my turnover for April has dried up completely. Let's say you're a cafe, for example, and they've shut you down. But if you open up again, you might start to ramp up again and be okay. Under the legislation, you only need to satisfy this test once. So if you satisfy this test for the month of April and you say that you can show that you've suffered a decline in turnover of 30%, as the legislation currently stands, you'll be able to claim this JobKeeper package until September, irrespective of what your turnover does between now and then. Okay. So on the flip side of that, next question is, well, what if you don't satisfy the turnover, the reduction in turnover now? So you're still doing okay in business, but you've actually done your sums, and next month you expect your turnover is going to be down by 30%. In that situation, not register for JobKeeper now. Wait until the month where you can actually prove that you're going to have that downturn, okay? Because if you're looking right now, you do not satisfy that 30% reduction, which means you are not eligible, you should not be registering. So just wait until the particular month or quarter where your expected income is expected to drop. So everything we've just gone through is simply to determine whether you are eligible to be in the JobKeeper system. So once you have then determined that you are, so let's assume that you are eligible, we now need to look at the steps involved in registering and actually getting the package. So the absolute first thing you need to do is register if you are eligible. Now, some of you, or I'm assuming quite a few of you, have already jumped online onto the ATO website and registered for JobKeeper updates. So what is on screen probably looks fairly familiar to you. This is not registering for the JobKeeper package. This is simply putting you on a mailing list that they can send you updates as to what's happening. Actual registration for the JobKeeper package will not commence until they've given the 20th of April as a date. Quite simply, the ATO aren't ready for it yet, but we're expecting 20th of April. So in roughly 4 days, you'll get an email most likely to say that you can now register. Now again, keep in mind, you can only register if you are an eligible employer and satisfy that reduction test. Once you do register, you then need to notify the ATO of your eligibility and give them a list of employees that you are going to be paying under the JobKeeper package. Now, and again, that won't be available to the 4th of May. Again, keep up to date with what's happening, but that'll be the second step that you need to do. Now, how you will do that will be most likely via the business portal. So if you've not registered for the MyGov ID yet, if you do not know how to access things online with the tax office, now is the time to do it, because a lot of the reporting that you'll need to do if you are doing it yourself will be done via the business portal. And if you do not have access to that and you can't enter the information, then you will not be entitled to the JobKeeper package. So I can't stress it enough. If you do not have MyGov ID, do it now. Notifying staff. Now, this probably should be put up a little bit higher in the list, but it's very important that you notify the staff that you actually are registered for the JobKeeper package. So the tax office have recently released a nomination notice, which you'll see on screen there now. And at the end of these slides, I'll actually give you some direction on how to find it. It's fairly simple if you Google it. But this is the form that the ATO released, I think, yesterday, to say this is what you need to give the employees to confirm that you will be that you are registered for the package. Once you have sent that to them, The issue is you actually don't know whether every employee is eligible in their own right to receive the package. So not only do you have to give them the notice, you will notice right down the bottom there's a section B the employee has to complete. And in that, they complete their details and they tick a box that confirms that they are eligible to physically receive the package. And this notification you'll be required to keep for 5 years. So make sure you keep it on file to make sure if you do get audited in the future, that the staff member notified you that they were entitled to this package. Step 5 I've got on screen. If you haven't already done so, and we're hoping that doesn't cover too many people, single touch payroll. Now, theoretically, this was had to happen on the 1st of July, and I would suggest that probably 90% of clients probably are registered, which is great. If you are not registered for single touch payroll, now's the time to do it, because registering for this STP will mean you'll get your JobKeeper package quicker than if you're not. And you will then, if you're not registered for STP, you'll actually have to do things a bit more manually as well. So again, if you're not registered, jump on board, single touch payroll. Once you've done all those things, the final step in the process will be that you'll need to report your turnover monthly. Now, when we say turnover, the tax office is going to want your past turnover, but also your projected turnover as well. Now you can see on screen there, that doesn't change your eligibility at all. It's just information that the tax office needs to confirm what your turnover is. But again, as long as you satisfy your reduction in turnover, then you're absolutely fine. But this will be a requirement for you to do if you get the JobKeeper package. And again, mentioned before about registering for MyGov ID, this will be how you do that, or one of the ways you can do it. All right, so we're going to turn now to a list of questions that have come through during the week, or questions that we're often asked from clients about the package since it was introduced. And you can see there's probably about half a dozen or so on screen that we're going to work through. So don't be too concerned of reading through all of them on screen now, because we will work one by one through each of them. So the first one was pretty easy, is the $1,500 per fortnight a gross or net figure? Early on in the piece, it wasn't really clear which one it was going to be, but now it has become a lot clearer that it is actually the gross amount before tax. The second question that we were asked the other day is, what happens if the employee is salary sacrificing some or all of their wage to super? So this particular client was salary sacrificing all the client's super or salary to super. So they said, well, can they still get this package for them, given that they weren't physically paying them a wage, it was all going to super? And in this case, we can confirm that anything you salary sacrifice is included as wages and does go towards the $1,500 minimum. So it doesn't matter if they salary sacrifice 100% of their wage, you'll still be entitled to get the JobKeeper package for that particular employee. The other one we are getting quite a lot of at the moment is, do we need to pay staff now, or can we wait until we actually get the JobKeeper payment? Now, this was particularly important early on when we didn't really know, that they hadn't released a lot of information about it. We do know now that technically you must physically pay your staff before applying for the relevant JobKeeper package. However, the ATO have made a concession for the month of April because they've realised that they're fairly late in getting this all up and running, and they have agreed that if you've paid any staff under the $1,500 previously, you can make up that payment a little bit later, but it has to be before the end of April. So if you had any staff that you've paid in the first week or so of April that wasn't up to the $1,500, you need to make up that top-up payment to the $1,500 before the 30th of April. I'm just going to go through a couple of examples. We've got various clients. If you're on a fortnightly pay, it's all fairly simple. But what happens if you're on a monthly or a weekly cycle? Particularly monthly, it can be quite confusing. So if you are paying monthly, we're just going to go through a quick example for you here. So let's assume that your pay period is from 1st of April to 30th of April. And let's assume that you physically get paid halfway through that period. JobKeeper package starts on the 30th of March and is every fortnight thereafter. So your JobKeeper fortnights are as on screen. So 12th of April, 26th of April. So you can see in this particular scenario is that the actual payment itself falls within that 12th of April to 26th of April period. Now, the issue you're going to face there is if you say that that particular person wasn't employed or didn't receive a wage in that 12th of April period, you might only get $1,500 instead of $3,000. Okay. Now, this is all going to depend on how the various software providers, now a lot of our clients are on Xero and there's quite a few on MyOb as well, but it will depend on how those software providers come up with a solution to all this. But for monthly, people who are paid monthly, you might actually have to find that you need to process some form of payroll in April or the 12th of April and another one in the 26th of April to make sure you get your full requirement. So we're not quite sure how that's going to work yet. It is going to depend on how the software providers structure their pay system. So we'll wait on details of that as it comes out. But we just need to make sure that the particular employee gets their full entitlement and not just $1,500. If you pay weekly, it should be fairly self-explanatory. So if your pay period sort of falls on 1st of April and every week after, JobKeeper package starts on 30th of March and runs each fortnight. So what you would do there is on the 12th of April, you would declare 2 lots of weekly wages. And then on the 26th or 27th of April, you would declare the next 2. So fairly simple if you're a weekly employee. And again, if you're on single touch payroll, the system should, once they've got it all worked out, and Petra was on a seminar with Xero, or it was a Xero seminar this morning, talking about them working day and night to get their software up to date so they can roll this out by the 20th of April. Now, the other question that we're quite often asked is, what if the employee's normal wage is less than the $1,500 per fortnight? This can get a little bit tricky, and there's a few things you need to look at. Now, the first thing you need to be mindful of is that $1,500 is the minimum per fortnight. So if they've been working less than that and being paid less than that, then you have to bring them to a minimum of $1,500 per fortnight. The one proviso on there, though, is whatever that top-up payment is. So if you have to top them up an extra $500 to get them to that $1,500, you don't have to pay super on that additional $500, but you do have to pay it on their typical wage of the $1,000. The other thing to remember is you actually can't force your employees to work additional hours. The thing with the JobKeeper package is it still ties in with the various workplace rules and regulations, and there have been some changes to it to be able to implement this JobKeeper. But one of the things is you just can't force your staff to work more than is reasonable. And the final thing there is this is the one-in, all-in system. So what that means is you can't include one employee and not include the other. If they are entitled to receive the JobKeeper package, then you must include them and pay them the minimum of $1,500. When will the money start flowing? Which is a lot of questions at the moment. A lot of people are really struggling with cash flow. We have been told that the money is expected to flow provided you register, provided you put all the details in when you need to, and provided you're on STP, because that will make it quicker. Should flow within 14 days of the end of month. So how quickly, whether it's the first week or the second week of May, we're not sure, but they have said within 14 days, and then it will be monthly in arrears after that. So just a couple of, before we move into the next section here, there were a couple of questions that were sent through earlier in the week, which we didn't get on the slides, which I'll just run through. We had a question about the JobKeeper package versus the trainee subsidy, which is available, or the apprentice subsidy. Now, basically you can't get both. You can't, if you've been on the trainee subsidy or the apprentice subsidy, you can't, which is a 50% on their wage, you can't get that plus get this JobKeeper package. It's one or the other. Now, the issue is, if they are eligible to receive the JobKeeper package, it's a one-in, all-in system. They must be on it, which then means they will be, you can't also get the trainee subsidy. So effectively the JobKeeper will take over the trainee subsidy or the apprentice subsidy. The other question we got in line with this is in relation to parental leave. So we have a couple of clients who are on parental leave at the moment who have asked, will they be able to get the JobKeeper package? It's very clear that that is not the case if you're getting it from the employer, and you will need to have waited till you've finished your parental leave before you can be entitled to the JobKeeper. And I've just got Petra tapping me on the shoulder here, who's looking at the legislation and relevant notes on this, so she might have something to say on that as well.
Sorry, I'm just going to correct you slightly. There's a difference between employee getting the parental leave from through Centrelink, so that's the one that's excluded, and you'll have to wait for that one to run out. However, if you're the employer that's paying them parental leave outside of the Centrelink payments, then they're still included and eligible. That's all.
As I said, Petra's the one who scrolls through, and she's on the screen next to me. She's got legislation, she's got rulings, she's got explanatory memorandums, so she keeps me on my toes, which is awesome. All right, so what we want to do now is looking at business owners and sole traders. So if you cast your mind back, a little while ago, the ATO released some rules around pay-as-you-go withholding to be able to get some rebates from those. Now, business owners and sole traders were specifically excluded from that initial package, which is why the tax office was keen to include those particular people within this JobKeeper package. So there's some relief for both business owners that haven't been drawing a wage and sole traders, and we'll run through those. So, quite simply, are sole traders entitled to the package? Fairly simple, yes it is, provided they meet the eligibility test. So if you cast your mind back, the eligibility tests were two things. They were running a business on the 1st of March and they meet that reduction in turnover test. Okay, and specifically we were asked about Uber drivers in this regard, and I think pretty much every Uber driver I know is a sole trader, and every Uber driver I know has suffered that 30% reduction in turnover. So yes, provided they meet those conditions, they will be okay to claim that. And business operators get access to the JobKeeper package if they aren't drawing a wage. Now, I think probably a quarter of my calls during the last week or two have been about this question, where we have clients who are operating a business and they might be operating through a trust, for example, and they've been drawing, they haven't been drawing a wage, they've just been taking drawings, and and then including that at the end of the year. Now, the tax office has come to the party a little bit here and said that if you haven't been drawing a wage, but you are a business participant, then you can get this JobKeeper package. And what does business participant mean exactly? For sole trader, it means the entity itself, so the sole trader, which is simple. For a partnership, it is a partner in the partnership. Now, an issue there with a lot of our clients is that it can only be one of the partners, okay? Which is typically fine if it's a husband and wife team, but in larger organisations where there's a partnership of unrelated parties, only one party can claim the JobKeeper payment. The third one there, which is probably the big one for a lot of clients, is if you're trading through a trust, it is an adult beneficiary of that trust, and there are a couple more things you need to satisfy. And if it's a company, it's a shareholder or director in the company. Now, not only do you have to be one of those people, you have to be actively involved in the business, step one. You have to be not employed in the business at any time during a particular fortnight. So what they're getting at there is you can't claim the JobKeeper package as an employee and also under this business participant section as well. And again, as I said, only one business participant per entity. Now, that seems to be fairly simple, but it can cause some issues in a number of cases. And I know a lot of clients are in a situation where they have a company that they're trading through and have a shareholder trust underneath. And let's take an example where Mary, the wife, is a director and Steve is just receiving distributions of the business, although he is actually the one working within the business. In this case, we're saying Mary does the bookkeeping in the business. He's the one who's signing all the documents and those sorts of things. Whereas Steve, he's running the business. He doesn't like paperwork. So he said, Mary, you can be the director and you just sign everything. I just want to be working in the business itself. Now, let's assume that Mary also works for another business. She's only a bookkeeper part-time in this family business. So she's got another job, and that job pays her a JobKeeper allowance. In that situation, because Mary already receives a JobKeeper allowance from another employee, she's not entitled to the JobKeeper allowance through the family business because she can only get it once, which is fair enough. Steve, however, he cannot get it at all because he's not a director of the company or a shareholder of the company. He's simply, even though he works in the business, he's just getting a trust distribution. So you would think Steve would be entitled to it, but because he doesn't have a direct link to the company, he can't. So there is possibility that we need to restructure some clients. And in this case, it would be a simple case of removing Mary as the director and appointing Steve as well. And in this case, Steve would then be able to get the JobKeeper package as well as Mary. We do need to be a little bit mindful, however, because the ATO have come out and said if you do any sort of restructuring or changing that was done purely to receive these benefits, then they will come down on you hard down the track. So there needs to be a very good reason why we're doing the restructure that doesn't have the answer to get the JobKeeper package. So there may be some restructuring, but it's on a case-by-case basis, and we'll look at that on each case. So that is pretty much what we've gone through there is a summary of everything that the questions that we've been asked along the way of the JobKeeper package. There are more questions that are coming and need to be answered, and the tax office is updating us regularly. And when I say regularly, daily, we're getting updates on different questions about how it applies to different circumstances. But in summary, what you need to do now are the following. Firstly, determine your eligibility. So as I said at the start, if you're in business on the 1st of March, And if your turnover has dropped by more than 30%, either on a monthly or quarterly basis, on the same time last year, then you're eligible. If you're in one of those grey areas, right now you're not eligible until the tax office comes up with a mechanism to, or changes the rules slightly to account for the drought or babies or growing businesses, whatever it might be. But right now, as the law stands, you cannot claim it. So test your eligibility. Once you've determined you are eligible, your next step that you have to do is tell your staff. Now, we showed on screen before the ATO have released a form. Now, on screen, if you Google ATO JobKeeper Employee Nomination Notice, it will be number 1 or 2 that pops up. That is the form that you need to provide all your employees, and then they need to come back and confirm whether they are eligible or not to receive that package. Once you've done that, the third thing you need to do is register. Now, we said before, registration isn't quite available yet, so we've got 4 days to go before that happening. Put it in your diary so you don't forget it, so that you can register. And part of that registration, as far as we're aware, they will ask for your estimated number of staff that are going to be included in that registration process. Next step will then be on the 4th of May, notify the ATO specifically which employees are to receive that payment. So by that particular time, you should have got all the notifications back from your staff, and you can then notify the ATO which staff are going to be eligible. And that way, keep in mind that's the 4th of May, they can start rolling out some payments to you. There will be a requirement every fortnight to report your wage to the ATO. Now, as we said, hopefully that will be done through Single Touch Payroll, STP. So make sure you're registered. If you're not registered, you can most likely do that manual through the business portal. So again, make sure you are registered for MyGov Business to do that. And the last thing on your list of things you'll need to do is every month you'll need to notify the ATO of your past turnover for the month and projected turnover for the month. Now again, keep in mind that does not determine your eligibility, that is just information gathering for the ATO. But again, you'll need to have access to the business portal to do that. Once you do all those things, happy days, you will get your $1,500 per fortnight, and that should be starting, I've said from the first week in May. I probably needed to update that to say within 14 days of the end of the month. So I did read something initially said the first week of May, but that's now been superseded to 14 days after the end of the month. Okay. So the point is you need to take action now. So what I've highlighted on screen there in blue are the things that you should be doing right now. So determine your eligibility, notifying staff, and if you haven't done so already, registering for Single Touch Payroll or access to the business portal so that you can report when required. So what we will do now is, as I've been talking, I've noticed a few people, there might be some questions coming through. I haven't been looking at that as I go along because I knew I'd just get distracted. So if you do have any questions, pop them in the box now and hopefully we will get to answer them. I will just stop sharing screen now so that I can see. I can see that we've got quite a few questions coming through. So from Clara, for example, the one in all-in rule, does that include employees that have been stood down because you've closed and given a separation certificate? So in that situation, the tax office has said if they were employed on the 1st of March and you have stood them down, you can rehire them and still be entitled to the JobKeeper payment. So the whole point of this exercise for the tax office is you become a mini Centrelink, in effect, is they don't want these people sitting in the dole queues. They want to give you the money. You can do the administration from it. So if you're going to need those people moving forward, if you need to re-engage them, then absolutely you can do that and get them on your books. So yes. Do sole traders need to register for single touch payroll, or is it just employers as such? Look, sole traders don't need to register for single touch payroll if you're not physically employing people, but you will need to still jump onto that business MyGov system. And I think you're able to do it through MyGov as well, but you should have that business MyGov set up as well to be able to do that reporting. I'll just go back up. There's a few questions a little bit earlier, which I'll scroll through. Lynette, hi, how are you doing there? There are more discussions and decisions yet to come from the ATO for sole traders, etc. Correct? Absolutely. Yeah, look, the ATO is putting stuff out there all the time. We did hear that they're going to be putting more information out tomorrow. What that specifically is, we don't know yet, but they would have been bombarded with all these types of questions in the same way that we were, and they are addressing them as they come to hand as well. So Irina, I think it is there. Are we able to pay employees less than the $1,500 at the moment due to the limited cash flow, and then apply for the JobKeeper and pay once the rest is received? The ATO have specifically said that it has to be paid by the 30th of April. So that is one of their requirements. You must pay them the minimum, and it had to be done by the 30th of April. Beck, your question there, what if you're a director, do you get it? So we did cover that. Yes, you will get it if you're a director of the business and you are working actively in the business as well. But again, you can't double up and be an employee and get this as well. But yes, you can definitely get it. Okay, sorry, just scrolling through the question. So Cherie has asked, my husband is a director and employee along with his father. They're both builders. Only 2 people working in the company. Business has stopped due to the virus. Are they both eligible? Usual warning. Yep. So if one of them has been paying themselves a wage, they can get the JobKeeper as an employee. And the other person, if they've been an employee and paying themselves, they can as well. If one of them's an employee and one of them hasn't been drawing a wage, then they can still access both, provided he's actively working in the business. If neither of them have been drawing a wage, then only one of them can get it. Okay, hopefully that's clear for you. Just scroll down to the bottom of the list there, because I think I saw a few more. Okay, so Alfonso, double checking, subcontractors not eligible, correct? Yes, that is not, well, sorry, that is correct. Subcontractors are not eligible for the JobKeeper package. They must be employees.
But that means that they would have their own ABN and they would be able to apply for this themselves, provided that the income drops by more than 30%.
Very good point, correct. So yes, so it would be up to them to speak to their accountant about applying for it themselves and getting access to it. Yep. Karen, I see your question. I'm a family daycare educator running my own home-based business. So I'm my own employee, so this process will be the same. So presumably you're running as a sole trader in that respect. So absolutely you'll be able to claim this. And I'm assuming being a family daycare, you've dropped more than that 30%. So yes, that would be fine. Tim, wife working the business, not a director or shareholder and hasn't been drawing a wage. Any eligibility if I back pay her March or April? Okay, so 2 questions there. If your wife is not a director or shareholder and hasn't been drawing a wage, she's not eligible. And then your second question is, any eligibility if you back pay her for March, April? Basically, the tax office will consider that a scheme to get the JobKeeper payment. and they will come down on you hard if you are audited. So there has been discussion around this topic, and we do know some accountants who have advised that it is okay if they are working in the business. We have seen a number of lots of information written from the ATO which says it is not okay, and if you go and back pay people and change the way you've been doing things, they will come down hard on you. And as an accountant, we've been told by our professional body that it is not acceptable. But again, I do know some accountants that are probably pushing the envelope to a point where they shouldn't. And if you get audited, beware to pay it back with interest and penalties. Okay. Very hard. Do you have to? Okay, Clara. So previous question about rehiring. Do you have to rehire? In order to get the JobKeeper package, you have to rehire them. So that would then mean that they're entitled, or depending on whether they're casual or part-time, full-time, you might need to accrue leave and do all those things. But technically, you have to get them back on your books as an employee before you can start paying them the JobKeeper package. So you've got to re-engage them. Otherwise, unfortunately, they've got to go down the line of the job seeker. I've got to get those two right, JobKeeper and job seeker. So they'll have to go to basically in Centrelink and get the job seeker if you don't re-engage them as an employee. So sorry, just a follow-up question from Karen from the daycare. Follow-up question: JobKeeper employee nominee forms will be the form that I need to use, putting my name as both the employer and the employee.
I'll get that one. So that's one of the things that the ATO is coming back to the practitioners in regards to the sole traders. Obviously, as a sole trader, you the business owner, and you can't employ yourself per se. So they're going to have a different set of forms for sole traders, but they're not available yet. Seeing everyone will be able to register from Monday, we are really hoping that they'll come out tomorrow. So if they do, we'll just do the posts on the social media and such.
Yep. So another one of those wait and see moments on that one. Ben, hi Ben, how you going? Any advice on how to handle pay-as-you-go? I'm assuming that's withholding while wages are being subsidised with JobKeeper. Now, keep in mind the pay-as-you-go withholding is going to be covered under the separate rules where you may be eligible for a rebate on the pay-as-you-go withholding. That's going to be up to $100,000 depending on what your wage level is. So I'm not sure if I'm actually answering your question there, Ben, or not. But yes, there is that other component that the ATO introduced for the pay-as-you-go withholding as well. Neil, it seems like the ATO JobKeeper employee nomination form is currently unavailable for download. Okay, it should be available. I'm not sure why that is, unless it's just in overload at the moment, possibly. But yeah, it should be online. Robert, if you're a director, do you physically have to pay yourself for March and April before the end of April, even if you are not getting regular drawing wages previously? So yeah, so the ATO have specifically said that if you want to get the JobKeeper, you have to physically pay the wages by the 30th of April on that one. So Alfonso is just double checking, has a receptionist, is on a working visa and has been working for 7 months, eligible ? Petra's going to answer that one.
Hi Alfonso, I did have a look, and you're going to be either Australian resident, or the only visa that seems to be eligible is the 444, which is a New Zealand citizen. So unfortunately for your girl, it looks like she's not going to be eligible for this one.
There you go. Okay, so I'm going to jump. I see a couple more questions coming through. Christy, can you define what GST turnover is? Is this GST reported as owed to the ATO? Okay, so we did sort of cover that, and that is probably the one big unknown at this point. Sorry, Petra's just pointing out something there, but
so Christy, it's not your profits. It's the actual sales. The only question at the moment was whether it's cash or accruals basis, because obviously a lot of people might have still issued a lot of invoices. However, it's very questionable whether any of these will be paid. So not 100% sure on the cash versus accruals one, but it's definitely your sales, not your profits.
Yeah, I think we might have read that a bit differently, but yeah, so really the answer is at the moment we're thinking it's an accruals rather than cash, but we're just waiting on confirmation of that one. Emily, just reading yours there. If we have rehired our staff and they are only being paid the equivalent JobKeeper per fortnight, do we have the obligation to pay super on that wage? So no, if they're not doing any work, they're not doing any hours, you have just got them back on your books, then you are obliged to pay the $1,500 minimum, but there is no requirement to pay super on that at all. And your second part of the question, you assume Xero is working on that. Yes, they are. They are madly working on that at the moment and should be for release very soon. So yes, and Emily, hopefully the business is going well for you guys. So yeah, so for everyone else in the room, Emily's got a very good, nice restaurant in Brisbane. So obviously one of the very hardly affected by all this, like a lot of people are. So Petra's just pointed one, how are companies in their first year of trading tested? At this stage, we don't know is the answer. They are one class of businesses that we're waiting for the Commissioner to come out with a determination for. It does say that you need to compare to 19, but if you can't do that, there was something in the explanatory memorandum that said you can do another period. Now, again, it's not in legislation yet, but I think you've got a very good case to make some estimates based around that. But I think that's one of those wait and see questions that hopefully the ATO is going to come and address those types of businesses. So I'm just looking at Linda Rossi. I do FDC and also have rental properties. So is the 30% based on both lots of income? So I'm just not sure what FDC is, Linda, but with rental properties, if they're residential rental properties, they're not included in your turnover test. So if they're commercial, they are. But yeah, residential properties aren't included in that turnover test. Okay, all right, I've got a really good question there from Joseph. Joseph has said, what if my quarterly projected income is wrong and my turnover was only 10%? Now, I'm not sure if Petra wants to answer this one or not, no. Under the legislation, it's up to you to project your turnover, or up to you to determine what your projected turnover is. And it's up to you to keep records on how you've calculated that number. Now, if you've got some really good paperwork that shows that you've made a really good attempt at estimating that number and it's below the 30%, then you are entitled to register for the package. I would caution you though that you would have to have some serious records if you predicted 30% but it was only 10%. But having said that, there is no reason why under the current legislation, the rule is you must project your turnover for the month or the quarter to be eligible. Few more questions there. Okay, question is, I'm a sole trader, not registered for GST. Does this matter? Absolutely no difference whatsoever. Your registration for GST has no impact on this whatsoever. Tanya has asked a question, also if subcontractors are eligible and their income from me has stopped, how do they prove the $1,500 to transfer? How do they prove the $1,500 to transfer? Not quite sure what you mean there, Tanya. Keep in mind, your subcontractors aren't entitled to this. However, they would need to look at their circumstances, whether to see if they were entitled to it as well. Karen, good question from Karen Nixon, which will apply to everyone. Do I need to get an accountant to do profit and loss statements for this period for the period last year and this year? No, if you've got all your bookkeeping up to date, hopefully you're on Xero or Maya, one of those packages, you can easily pull out those reports yourself if you know which reports to get, and you can do it all yourself. There is no requirement to get an accountant to do these things, but you've got to make sure that you do it right. So therefore you might want to get an accountant on board. So for ours in particular, we do have packages that we can do it for clients. And I didn't put that on screen. It was my last slide, but I didn't want to, the point of this was not a selling exercise. It was to show you guys how to do it yourself if you want to. But yes, you can do it yourself. Tim O'Brien, re-top up payments. If we will only expect to be eligible in future months for those earnings less than $1,500 per fortnight, when do we need to be paying the $1,500? Yeah, so the $1,500 has to be physically paid in the particular fortnight that you are getting the package for, with the proviso that April that we're currently in is by 30th of April. So I think that's answered your question. I'm not entirely sure, but that's the answer there. Okay, so Karen, follow up. So this was around whether you need an accountant or not. So Karen doesn't have a program. The accountant does my yearly tax. So again, it's up to you, or it's up to someone, whether it's yourself or your accountant, to determine whether you meet that 30%. And if you can determine that based on paperwork that you have at your disposal, that's fine. If you need your accountant to put things together to determine that, then absolutely you'll need the accountant to do that for you then. Question, do sole traders need to make a salary payment from their business bank account to themselves? Sole traders cannot pay themselves a wage or a salary. It's just not possible. So no, there is no requirement to physically make yourself a payment if you're a sole trader. You'll be entitled to it anyway. All right, I think we've got a couple of more questions. I think they're running out, which is great. And sorry if I've missed any, because they have been coming thick and fast down the side of the page there. So Joseph, I think the follow-up to your question, what's the downside of registering early rather than waiting for a 30% drop? Downside of registering early, the downside is, keep in mind that you need to every month tell the ATO what your actual wages is, what your actual turnover is and what your expected is. So if you tell the tax office that yes, you're eligible because you've hit that 30% turnover, and then you start reporting your actual, they will go back and compare that to your BASs last year, or even your tax returns last year, and do the comparison. and you'll find out their HO systems are very good now. Their computers will be working through this, and there will be a lot of audit activity on this once it's all said and done, without a doubt, no questions asked. So you run the risk if you don't, or if you don't have good records to justify that 30% decrease, you run the risk of them coming back later, asking for it back with penalties and interest. That's your downside. Tanya, dance school owner can look at above question, which I think, okay. So we've answered that one. Tanya, if I haven't answered it, feel free to shoot me an email later or give me a call later, because we've got a few more coming down. Lynn, hi Lynn, how you going down there in Sydney? If an employee is normally paid $500 per week for 2 days and they agree to work 3 days for $750 a week, is that okay? Absolutely, that is okay, not a problem at all. What is not okay is if they've been working 2 days a week constantly and you now force them to do 3 days when they don't want to. But if they're quite happy to do that, then you're fine. And just on that, keep in mind, what we've gone through is the JobKeeper package. It does interact quite closely with all the relevant employment legislation and fair work and all those things. So if you do have any of those sort of curly questions around that, it is sort of a fair work question, or you need an HR professional to guide you through, because I have heard stories of a lot of employees sort of saying, well, I was working before, I'm not working now, you'll give me the $1,500 and I'm not going to do anything. So yeah, you do need to tread a little bit lightly still how you treat employees, and you still have to satisfy that the fair work rules as well. Louise, also down in Sydney, how are you doing, Louise? Should I register JobKeeper as an employee or business participant director, since I am paying myself indirectly more due to money the company owes me? Okay, so in your case, Louise, if you have been paying yourself, or if you're paying yourself a wage, you do it through the wage system. Now, if you have not been paying yourself a wage in the past, you've been taking drawings or loan repayments, then you go through that business participant avenue. So that's sort of a secondary avenue for people who have been doing exactly that and have been taking drawings rather than a wage. So yes, you'll be entitled to it. Vanessa has a question there about the $1,500 per fortnight will continue until business income increases, which the HO will see and likely contact us to say we are no longer eligible. Surprisingly not, Vanessa. The ATO have said once you are eligible, so if right now you determined you are eligible, and for everyone in the room, Vanessa's a builder, so seeing downturns as well. If you determine right now that your turnover is going to drop by 30% in the next month or this month or next quarter, then you are eligible. There is no need to reassess every month or every quarter whether you are still accessible. You will continue to be accessible until it ends in September. I don't know why they did that. It doesn't quite make sense to me, because a lot of people will drop off in this next couple of months, but once things get back and up and running, hopefully they'll take off again. But I think the HO saw that this was going to be a 6-month scenario, and look, they've thrown the kitchen sink at this one. And again, I think this is going to be why there's going to be a lot of audit activity later to actually to make sure everything's done right. Mark McKenzie, how you going, Mark? Can you please answer Neil Bence's question? Okay, I didn't see Neil's question, but I'm assuming it's the one you've copied and pasted. If we are in the wait and see category, should we register on 20th of April or wait until it looks like the business is eligible? I would have to confirm what your wait and see category was. If it was along the lines of not being able to compare your turnover now to the same time last year, to me, you should not be registering, because under the current legislation, you are not entitled to the JobKeeper package. The ATO has opened the door that you may be entitled to it, and they will be bringing out information on that as they go along, as they get submissions themselves. But right now, as the law stands, you're not entitled to it. I'm hoping that answers your question, Neil. So yeah, so Neil has come back and said growth companies wait and see. So yeah, so if your business is through a growth stage, then you must at this point compare to the same time last year. Tanya, dance school teacher, turnover has already dropped by 30%, is continuing to drop every week. I've paid myself a wage in December last year, and now this first quarter of 2020, will I be eligible for the 10K payment on the BAS submission? Okay, so the 10K payment for the BAS is something separate to the JobKeeper package. So we weren't going to specifically cover that in this meeting, but happy to field that call if you want to give us a call later and go through that. That's fine. Okay, look, I think I'll do one more question here, and then I think we'll wrap it up. And I'll go back. I can see. Okay, I'm going to answer Mummy Bear. Apparently Mummy Bear is on leave due to having surgery and don't go back until the 20th of April. Have been off for 4 weeks, so families happens, then do I still qualify for JobKeeper? So I'd probably need more information on that. I'm assuming you're talking from an employee perspective rather than employer perspective. I just can't tell with the information you've got there. However, you would have to go through the general requirements of, is your employer eligible by having that 30% drop? And are you in one of the eligible categories? So can't quite answer that with the information you got, but again, happy to field that call if you want to give us a call after this. So I think we've pretty much answered everything now. I wasn't quite sure how long we'd go for because there's a lot of information there to run through. So look, as I said, we will make this webinar available afterwards for everyone to have a look back. But I think the important takeaway from this is have a look at the last couple of things we mentioned on things you need to do now. So checking to see whether you're eligible. If you are eligible, start talking to your employees, finding out which employees are eligible, because on the 20th of April, which is only 4 days away, you can start actually registering. And I can guarantee now that a large part of the business community in Australia will be trying to register on the 20th of April as well. So if you can't get through on the 20th of April, keep trying. They have, I think, said you need to be registered by the 27th or 26th of April is their deadline to do that. So just keep trying if you can't get online. I do know we had one client who said that when they were registering for something else, one of their other packages, that they jumped on at 3 o'clock in the morning and got through fine. So if you are having trouble sleeping, that's probably the best time to jump online and probably register for that package. So look, guys and girls, thank you very much for coming along. Hopefully I've answered a lot of your questions. If not, please don't hesitate to call us and ask us the nitty-gritty. As I said, there is still quite a few minor details to come out from the tax office, which will hopefully answer some clients' questions. But thank you all for coming. Good luck with it all. Hope your business gets through this and comes out the other side bigger and stronger. Thanks all. See you soon. Bye.